In the next 5 to 7 years, Bitcoin will be moving up in terms of market capitalization to the market cap of gold. Now, what does this mean for you? First of all, let's have a look at the difference between Bitcoin and gold in terms of price. As I've said in different past videos, when we represent Bitcoin as the price of gold in terms of its market cap, we expect Bitcoin to be trading above $1 million per Bitcoin. Now, does this mean you should just buy Bitcoin no matter what the price is? The answer is definitely no. Investors think that they don't need to time the market, but they absolutely do. If you buy at the wrong times, you can get thrown out of your positions just because of fear. Everybody anticipates that they buy the low, but this unfortunately is never realistically the case. And it's good to remember that every investor, when they buy or sell, is making a trading decision, and trading requires timing. Economic events, such as in the next 24 hours the FOMC is meeting, they absolutely rocket the market, and as far as smart money is concerned, there's a 99% probability that there will be no change. To investors, the markets seem like crazy things that move up and down for absolutely no reason. There is always a reason for markets to move. And when there's massive fear inside the market, that is typically the best case scenario for investors to get in, but it's absolutely the worst feeling to do so. In this video, I'll go through the key levels that you need to know. We'll check out if the markets are improving or the markets are decreasing. In terms of buying momentum, this information will be incredibly helpful. Let's run the numbers. Welcome back, Elite Service members and CTKS students. It's great to see you today. When we look at liquidations throughout the crypto market, we can see the majority of liquidations were long. This pushed the price down. When it comes to what moved the market in the past 24 hours, the watch list is your definite friend. And what did we see? The VIX decided to come up. The VIX has been driving the inversion of the markets. Now, what does that mean? It pretty much means that when the VIX comes up, expect the main markets to come down. And we've seen the commodities go up really quite well recently. You can see the major market indices from the S&P 500 down to the Russell, they all came down. The futures are a little bit flat with negative momentum, and we saw that the stocks just sold off inside row 4. Row 5, crypto felt it first undeniably, and USDT dominance or stablecoin dominance is coming up, and this means that there are flows out of the crypto coins in to the stable coins. In other words, people are just stacking cash, not stacking sats or anything else. They're stacking their USD. And when we look deeper into the crypto market, we can see signs of life inside the meme market. And now this is pretty good because it actually could be pointing to a bit of a bounce. But we need to look structurally because we need to see what row 1 references are doing. And we can see that they're not good. We're actually seeing that the VIX is registering positive momentum. It's been coming down and down and down quite nicely, but it did a kick up. It was this kick up that was responsible for the retracement in not only crypto but also the stock market. We've seen these retracements from time to time as the VIX drops down. The question is it going higher, or is this it and it's going to come down? Probably you'll try to answer that question by looking at the news. The news is just a complete waste of time to look at. You need to look at structure. The news will tell you a story, but the actual price action, which is what you're paying if you either buy or sell, is telling you the truth. It's not a story, it's reality, and you must look at reality. We've seen net Fed liquidity increasing over the past sessions. Bond market optimism is improving, as well as stock market optimism. And it's taken a little while for it to hit the main markets and also Bitcoin, but we've seen a bit of an improvement in both as well. As an investor and a trader, because all investors become traders anytime they buy or sell, you want to keep your eye on the long-term prospects of the crypto market. And of course, wherever Bitcoin goes, the alts do follow. One issue that crypto market investors and also stock market investors get into is that they are pulled in through the hype of an upward market, and they're attracted into the markets pretty much around their peaks. And because price is always moving in a wave, no up wave can go without a down wave. And when the down wave comes in, the market commentators, the news sources go absolutely ballistic, saying the price is going to zero. When it goes up, it's going to infinity and beyond. And when it goes down, it's going to zero. Just remember, price is always moving in a wave. A lot of times when it comes back down, people will say, buy the dip, buy the dip. And this makes sense, but only if you realize where the structural support safety nets are inside of market structure. Unfortunately, too many people just rely on the price being green or being red. And if it's green, they buy. If it's red, they sell. And if it's really red, they panic sell. A rule that we have, we don't seek tops and we don't seek bottoms, because it's all profitable if you manage to buy from a structural perspective. Now, what does structure actually mean? When we go back a couple of days, we can see that the S&P 500 was trading up and it managed to get over a level of structural resistance, but when it hit the next level, it bounced up and then bounced down. We did manage to get above it, but the market sold down recently. This was the jump in the VIX. So when the VIX goes up, expect the markets, including crypto, to come down. Now, did it go to zero? No, it went to a structural support level, and it's been hanging around there ever since. How do we know if the market is coming up or going down? What we saw in the past 24 hours was the major market futures unfortunately selling down. They did quite well. They staged a bit of a rebound and it looked like it was going to be sunny times ahead, but it just didn't happen. And when we got the retracement, this was the market open. And when the market opened, the futures dropped like a brick. But where did they drop down to? You've got it, structural support. If you didn't know structure, you would basically be saying this thing is going to zero, it's selling down like a wild thing, but it always goes to structure. Therefore, our most important question is, where is the structure inside the charts that we are trading and investing? And how does the structure of the cheat sheet influence our money chart? The first thing to be aware of when we look at Bitcoin, we've had, unfortunately, a cut under on the daily basis. This is not generally good, because when we get cut unders, it means that the sellers are gaining control inside the market and will push it down to a level of structure. If it doesn't hold structure, it can go multiple levels below that before it pings itself back. We did have a really positive outlook on the market just recently, the past couple of days. We saw, for example, we were supported, just ignore this candle at the current time, yesterday's candle or today's candle. We had all of this positive upward structural momentum and we had a cut over. And it meant pretty much that we had the possibility of going much higher. But then the VIX did the unthinkable. It bounced, and when it bounced, it put all this negative momentum into the crypto market and caused a cut under. We must honor cut unders. Inside the profiting course, I teach it pretty ad nauseum. If you get a cut under, you must pay a lot of attention to it. It doesn't mean it can't come back and get going, but it does mean you should be careful. All markets and charts are intercorrelated and interconnected. What we saw in the past 24 hours is that Bitcoin came up to the 84,557 structural resistance level and then started to fail. Even though the major market index futures look pretty good, Bitcoin didn't look good, and we saw that we lost the 84,204 level and also the 83,483 level. We did get caught around that 83,148 level, and this is how structural support plays into price action. But as soon as the markets opened, we saw that there was weakness leading into the open, and the markets, when they opened, they sold down. And we also know that the S&P 500 was caught in an area of structural support. And it's been pretty much flatlining ever since. You can see how Bitcoin, crypto, and the stock market work in concert. Now, what we're looking at now, we're seeing a retracement down to around the key level of 81,866. If we hold the 81,866, that will create positive structural attraction back to the 83,148 level. Now, if that actually happens, so many people are negative and bearish on the market that there will be just a preponderance of shorts. Wow, that's a pretty fancy word. There's just going to be a lot of shorts up there at the 83,148 level. And when they get liquidated, they become forced buyers, which creates buy-side liquidity. And we may find ourselves back up, even in excess of this 84,557 mark. That's the positive side. We always think in terms of 3 dimensions with the CTKS method. And why do we do that? Because we have to. We are professionals. We're an institution of one. If we lose the 81,866 level, there's still the 81,601 level. Now the shorts, they'll be trying to push Bitcoin's price below 81,601 and down towards 79,501. What do we need to look at to try to understand throughout the day which way it's heading, if it's going up or it's coming down? The best thing that you can do is to keep your eyes on the S&P 500 futures, the NASDAQ futures, the Dow futures, and also the Russell futures. If you start to see weakening inside the major market index futures, expect Bitcoin to lose its structural support and just pick it up at lower levels. What else can we look at? Looking at total crypto market cap is a very important idea to do. What we can see in the past 24 hours, we were coming up to this $2.71 trillion structural resistance. We just couldn't hold it. At this point, we had a structural failure that created negative structural attraction down to this 2.69 trillion. We had a structural failure there, and we can see that the markets were really negative in the past 24 hours. Why was this the case? Because the VIX was spiking. Just think about it like this. It's a little bit of an advanced method, but if you see the futures on the main markets coming down, that is the VIX spiking behind the scenes. And hopefully what you can do is you can look through your charts, not see total crypto market cap here, but also see Bitcoin, see the S&P 500, see the NASDAQ, see the Dow, see the Russell, see the VIX. That's what I teach you to do inside the Profiting course. So that's what you want to get up to. Now, what do we know here? From Bitcoin's perspective, we have structural support just below here. From Total's perspective, we've come in to structural support. Note down here, we had structural support around that $2.62 trillion level. Now, what does it mean for the up and also the down? We're actually seeing that there's quite a bit of structural support underneath this particular area. Now, how does that actually hit your investing and your trading decisions inside the crypto market? Remember, Bitcoin is going to $1 million, but you're gonna have to ride out the waves of negative price momentum, and they are doozies. What it means, if we start to lose this Bitcoin structural level and this one at 81,866 and the one at 81,601, total crypto market cap has a number of structural support levels playing in and above that 80,750. Now what it could mean, even if we lose this, we could get caught by total crypto market cap. So long as we get back above that 81,866, it's A-okay. But if we start to lose structural support and it turns into structural resistance on total crypto market cap, and you can see I'm teaching you how to look through a chart. So what does it mean for the next 24 hours? Provided the index futures come up and we see this holding of these structural levels and the lower levels of structure inside total crypto market cap and the current structural level inside total, it looks good for whatever you're trading and investing in inside the crypto market. And one thing to just understand, when it comes to crypto, we can see exponential explosions and then implosions in price. This is crypto. This is normal. But when things turn around, boy oh boy, do they turn around. And when we're looking at an upper bank assessment, we can see that Pepe, Ethereum, BNB, and Bitcoin Cash are on the top shelf. What about bottom shelf is SHIB, Litecoin, and Solana at the current time. Talking about Ethereum, Ethereum's been a right pain in the butt for quite a bit of time. Ethereum, ever since its ETF was approved, has been doing nothing but getting weaker and weaker and weaker. One way that you can cross-reference what could happen inside Bitcoin and total crypto market cap is looking at the alts. If you see that they're gaining momentum, that's a pretty good sign that Bitcoin and total crypto market cap are going to go positive. And that's what we're seeing currently in Ethereum. But around this 1910 level, we've got an overhead area of structural resistance. The thing to just note, inside the CTKS method, you already know where the structure is. You don't need to try and understand candlestick patterns or anything like that. You already know, hey, one is here, and they're stronger. One is down there, one is up there. You got a gap here, you got a gap here, so we can go up fast. So figuring out where support and resistance levels are is no issue. What you'll typically see people do is to fit price to the latest price, which has got to be the most stupid thing on the planet to do. Why is that? Because the latest price is always changing. If the latest price was there, people would fit to there. And when it's there, they fit to there. And when it's there, they fit to there. And now it's here, they would fit to there. That is an absolute waste of time. And it's also statistically insignificant. But you see people doing it everywhere. Not so in the CTKS method. There's a reason why this method is the world's most powerful methodology to detect where smart money will buy and sell in the future. For example, if we were looking at Solana and just trying to determine or assess where the buy and sell levels were, it's really easy. As soon as you mark up your chart with level 1 and level 2 standard certification, you can see exactly where the structure is inside Solana's chart. And you remember Ethereum's chart had a lot of overhead structural resistance around this peak, and Solana's chart has a lot less. You already know where the prices for support and resistance already are. No candlestick pattern analysis, nothing. You've got it delivered on a silver plate. What about ADA? If we looked at ADA over the same period of time, where is the structure? Where does it live? Well, it's very easy to see where the buy and sell levels are if you mark up your charts with level 1 and level 2 standard certification. And you can see around this particular level, that's 72.14. That is a really tough structural now resistance level. The fact that we lost it was already telling us that lower levels would have been actually being made available to us. And when you're an investor, you want to buy at lower levels. You want to get on the right side of the percentage. XRP has been really sensitive to market appreciation or depreciation. XRP has been very strong. And we can see the starting point of an XRP rally coming out. But that will depend substantially on not only XRP structure, but also what Bitcoin and total crypto market cap actually do. We can see structure playing through just around that 223 level. Now, what does this mean? If we start to create higher highs here, it's all looking good for the crypto market. But just keep in mind where your structure is inside the chart that you're viewing, and how that structure intercorrelates and interconnects between structure in other charts as well. Service members, it's really important you keep your eye on the structural interplay between the row 1 all the way down to row 7. What I've shown you today is a different way of looking across structural levels. Of course, we keep our eye on Bitcoin and total, but if we see Ethereum coming up, if we see ADA and Solana coming up, if we see XRP, Doge, BNB, you got it. Just the cryptos. If we see these improving, that really bodes well for Bitcoin and total crypto market cap as well. The commodities have also been doing really well. This is primarily because China is coming back online. It really was hit hard by its recession, but it's basically spending its way out of it. And that's creating, because China is the world's factory, that's creating a lot of demand for commodities. So let's have a look at gold structure. We were talking about this recently. Just before we get into gold, I thought I would quickly talk about strategy, formerly MicroStrategy. You can see all this bizarre up and down chop. What causes this? The answer is structure. Now let's just throw on the structural indicator available from the service. Now what do you notice? There's a lot of overhead structure and a huge amount of buying structure down around that 238. So you've got a negative CTKS gap, which can quickly turn into a positive CTKS gap, which can turn into a negative CTKS gap, positive CTKS gap, negative CTKS gap. You got the idea. If you trade the gaps, you're going to do incredibly well. And how much was that gap worth? It was worth in excess of 23%, and you could have been churning and burning strategy right, left, and center if you understood and applied structure. The primary difference between investors and traders: investors hold longer term, but traders just take profits. That's what they're always doing. If the trader understands where the structure is inside a chart and they understand how to read positive and negative CTKS gaps, they can absolutely make a fortune. Ideally, you want to combine your investing plus your trading, because your trading will give you a timing edge, and timing is literally everything. Just before we get into gold, we'll have just a very quick look at Tesla. Tesla is highly volatile, and that means Tesla has always felt it, just like Bitcoin. But what is the structure on Tesla's chart? Because that's the most important thing to understand. What we can see, we were holding that 238 level, and as the VIX spiked up, remember, it came down and down and down and put in a kick. When the VIX kicks up, it kicks your stocks and crypto to the curb, and that's what happened. But look at what actually occurred inside Tesla. It came down to the 221 or 222 mark and basically just held this structural support level and flatlined. If you didn't know structure, if you didn't know the structure safety nets were here, you could just think, oh, this thing is going down and down and down forever, and you would have sold at the open if you had that capability. People are getting really excited about gold. Look at gold. Gold is going for it. Now, what does this mean? Geopolitical instability, trade wars, all sorts of problems. Why is the euro dollar just spiking up at the moment? Repatriation. Trade wars mean screw you to other countries. And when a trade war occurs, that screw you occurs. Guess what happens? The euro has been appreciating like an absolute nutcase. Why? Because Europe said screw you to the US and took its money out. And it said, well, if you're going to do those things to me, I'm going to invest in my local market. And what happened to the DXY? The DXY plummeted like a brick. Why? Because people weren't demanding it. People were saying, I don't like you anymore. I want to get out of this thing. I want to go to my own hometown. I don't feel safe. And what is another consequence of trade wars? Apart from the fact that gold goes like this, another consequence is a capital rotation from out of democratic systems into other systems, such as China. And if North Korea had a market, they'd be in there too. But alas, that's not to be the case. This is exactly why the cheat sheet has been so weird of late, because you've got capital flows, you've got capital rotation, you've got trade wars, you've got geopolitical tension. Oh man, what don't you have? Okay, let's look at gold. Now, looking here at gold, all the gold retail will be just pumping in and saying, gotta buy gold, new all-time high, it's going to go to the moon and back. Oh God, what is that? It's something that retail will never see, but you know it's there. Around the 3,000 plus mark, around that 3053 up, you've got a lot of overhead structural resistance. This is a pretty tough area. And remember what was happening in MicroStrategy. MicroStrategy is pretty much a nutcase because it's linked to Bitcoin. That's why strategy goes up and down, and gold is a lot slower. It's going up and down. But, it's retired and it's sitting in the country club and it's just chilling or watching Netflix on the couch. But when you see gold getting up to overhead structural resistance, this is going to play in, and it's something that people won't even see coming. But we knew this was there. We knew that there were some nice gaps that gold could take advantage of. But just bear in mind, when we get up there, the party may flatten out. At least we know. The major thing is that when we look inside a particular chart, we don't care if it's red or it's green or anything. What we actually care about is the structure. We know that Tesla sold down into structure. And all of these charts are structurally bound. So that's why it's very important to look at the structure of them. And structure is unequivocally so vitally important to understand inside the crypto market. If you don't understand where the structure is, you're in a world of hurt. Just like in life, the markets always have retracements, and so do you. If you're going through a life retracement at the moment, always know that the sun will come out again. You're growing in terms of strength. You're growing in empathy and care and kindness. And that's literally the point of life. A lot of people think that the point of life is to amass as many toys as possible. You don't need one house, you need 50. You shouldn't get a car that just takes you from A and B. It should be a Lamborghini, and you should get 50 of them. Why the hell would you want to do stuff like that? That is just a BS narrative that is sent to you via and courtesy of the banking system. What you will find as you go through life is that your purpose and your destiny is not to compete with other people, because how can you compete against other people? You're totally unique. You want to find your unique way of contributing and sharing. But if you're contributing and sharing in a negative way, for example, you're ripping off banks or ripping off other people, that's not contributing. That's actually setting yourself up for a fall. So your contribution must always be one of positive excellence. Positive excellence is not about having entitlement, it's about having gratitude. Each day that you start again, literally inside your life, you can make your life anything you want. But if you make your life one of positive excellence, you're going to make a life that you can keep. Having integrity and decency is incredibly important. So many people lack both. Having kindness, a lot of people who compete think that kindness is a weakness. It is not a weakness. Kindness is a strength. Positive excellence is all about humility, learning, and patience. Negative excellence in this box is all about blame and entitlement. You are not entitled to anything. You're here to contribute, just like all of us are. If you look to all the multi-billion-dollar corporations, they're actually contributing something of value. If you wait for the roast duck to fly into your open mouth, Confucius says you're going to be waiting a really long time. And when it comes to money, money is just a byproduct of contribution. When people get into financial markets, they want to create Lamborghini money. You can do so, absolutely, but you must know what you're doing. And if you're doing it all properly, it will come. You don't have to rush it. Everybody's trying to sprint through life. Life is a marathon. Keeping positive is really important, so having daily positive affirmations for abundance, financial success and happiness is literally all part of the CTKS method. If you're going through a life pullback, our love and healing thoughts are with you, and just know that you're gaining strength for your next life rally. If you are dedicated and committed, if you focus on winning or learning and never blaming, you will succeed wildly in this world, but always succeed through doing the right thing, not the wrong thing, and you will intuitively know. Every day you can show kindness, integrity, and gratitude because the universe wants you to succeed. Showing kindness, integrity, and gratitude will make you happy. You don't get happiness from other people, you give happiness to yourself. And always solve your problems with positive excellence. Have a great day or night ahead, my friends, and please let me know, what are some quotes that you live by that help you to live a more positive excellence life? Kate and I look forward to catching up with you again in the next video. Bye for now.